Well, hello again. This is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is Monday, April 27th, 2020. I trust everyone had a wonderful weekend. For all of our clients, friends, and family out there, we hope you're staying healthy and safe. If there's anything you need, we're here a phone call away. But more importantly, we've got some news to talk about, what traders are watching, what markets are watching, and what to look out for this week. So 3 things I want to talk about today is, number 1, why is the market up? Number 2, small business versus government. There's a tug of war there, and I'll explain why, what's happening, what our concerns are going forward. And number 3, earnings week. Let's just start with earnings week real quick. In the S&P 500, I've referenced in previous daily broadcasts going back to April 13th, April 21st. S&P 500 is range bound, if you will. We firmly believe that. Even S&P 500 is up today, but look to the top side about 2,900. If we break through that, we're looking at 3,000, but that'll be pretty tough to do, all things considered. But we've said for consistently the S&P 500 is sort of in a range. It's normal, natural, a lot of volatility ahead. So we'll see where we shake out. The backdrop to that is the earnings week. So we have about 157 S&P 500 companies, about 14 Dow companies that are going to report this week earnings. And we really want to see we know that the SEC has already told corporations and C-level executives that they don't have to provide guidance. In fact, they can just pull the guidance. In fact, they don't have to be as buttoned up as they normally are as it relates to what they say, can't say, or almost don't say. In fact, the markets want the CEOs and these earnings calls to be at least, throw everything in there that you possibly can. Especially if it's bad, just throw it out there and get this quarter out of the way, because we know that's going to be the case. So we want to look to, some of the Dow leaders as well as S&P 500 and see what that looks like this week. So let's talk about the tug of war that I'm referring to. The tug of war is basically what small business owners are having a difficult time of is outpaying what the government is providing. By that I mean, there's a great article that I've attached in the notes below. Please take a look at it. It's on CNBC website as well. And it was an article about interviewing a small business owner. She is a salon owner in the Pacific Northwest. She was approved and received $177,000 plus in terms of government assistance through the PPP program. And she has 35 employees. So she held a conference call with the employees. She basically said, hey, good news, I can retain you guys. You don't have to come back into work just yet because we're not open. But in the meantime, I can pay you. And that's for her to qualify and receive that assistance. She has to then immediately pay them, which is wonderful. That's what it's for. It's basically, retain your employees and pay your rent and then stay at home until we are allowed to get back out there, essentially. And so she had this conference call with 35 employees, and over half the employees were extremely happy. They were like, oh, this is a blessing, thank God, it's wonderful. But a good majority of the employees were upset. Why would that be? You're gonna have your job back and you're gonna get a paycheck and you get to get paid staying at home. Well, they were upset because in order to get rehired, which the small business owner had to do, they rehired the employee, they had to give up the unemployment that they're receiving. Well, okay, what's wrong with that? The unemployment check was substantially larger than the check they would get if they were rehired by the business owner. So there's the tug of war that's going to be playing out over the next 3 or 4 months in the United States today, because the unemployment insurance is about a 4-month assistance. It's an additional $600 per week in addition just to the unemployment insurance. And so what's happening is that small business owners are getting their money in order to qualify. They rehire their employees, but the employees are making more money in some specific cases across the United States. Now, not all, and I'm not saying that this is happening all over, but this is what the markets are concerned about, right? So you have the ability to reopen America at some point in time, and small businesses, God willing, to get the funds from the government to ultimately do the right thing and rehire those employees. You got the unemployment rate of 26%, or 26 million Americans, about 16%, and that's rising on a daily basis. And then you got the small businesses calling their employees and saying, hey, come on in. Another challenge is that the unemployment benefit that's being received by the, those that are unemployed is also tax-free, okay? So you basically either give that check up, which is more, and then you get rehired by your employer, and then that's taxable income. So this is a little nuance that will play out in the weeks and months to come as we reopen the economy. Again, I'm bringing this to the forefront, one, because it was a big probably one of the most searched articles or read articles on CNBC on Friday. And if you're a small business owner, you're very curious to see how this plays out. And 50% of America are small businesses. So this is going to be very interesting in, again, like I said, the weeks and months to come, because this relates to sort of the markets, this relates to everything. So it'll be interesting, and keep an eye on it. So now let's talk about the distribution of returns. An April 22nd video blog I brought to the forefront in the title, Size Matters. And what I was referring to in that particular daily update was the distribution of returns, meaning larger companies representing by the S&P 500 are faring better than the smaller companies. So if you look at the rate of return by the S&P 500, as of Friday's close, they're down about 11% for the Standard & Poor's 500. If you look at the small cap index and every indices in between, mid cap, smaller cap, they're down probably even close to double digits, so over 20%. And the reason why that is that the larger companies, higher quality companies, have access to credit, capital, cash on the balance sheet. It's good to see, all of the public companies that have access to those markets give the PPP loan assistance program by the government, give it back. Okay, I said it, over a week and a half ago. I'll continue to say it, and now it's becoming sort of the headlines on a daily basis, and markets are sort of taking notice that if you have access, unlike a small business owner, mom and pop shop, you shouldn't even be in that arena applying for that assistance. So that's sort of working its way out, but the distributions of returns are still there. So higher quality is the sort of take-home point. And in terms of companies, and that's why the markets are up, because those bigger companies, think about it, will not only survive, as I said this before, but they're going to thrive. So smaller companies are going to have a difficult time surviving this, mom and pop shops even more so. So the largest companies in America are going to get bigger as a result of this once we see through all this economic downturn, and it's unfortunate. It's unfortunately the way the capital markets work, but it's another key element as to why markets are up versus the economy being down.